Hello dear traders, you're watching the weekly review of financial markets with me, Anna Kasatkina. On Friday, Wall Street suffered from a dramatic nosedive as sluggish retail data together with slumping commodities combined to sap demand for equities. The Nasdaq Composite Index lost 1.5% to settle at the level of 4,927.88. The high-tech index closed the week with a 4.3% loss, marking the worst weekly drop since August 21st. The blue-chip index Dow Jones Industrial Average sank by 1.2% to close at 17,245.24. Its weekly decline totaled to 3.7% and was its worst weekly drop since September. 28 blue-chip components finished in the red. Cisco Systems Incorporated, ExxonMobil Incorporated, Nike Incorporated and Apple Incorporated fell more than 7% since last Monday. The S&P 500 dropped by 1.1% to the level of 2023.04, with 9 of its 10 sectors closing lower. Over the week, the benchmark index plummeted by 3.6%. The S&P 500 turned negative for the year and fell below its 200-day moving average, which is a critical support level considered by many technical analysts as a bearish sign. Friday's downward trend followed disappointing earnings from big department stores such as Nordstrom and JCPenney. At the same time, worse than expected data on retail sales and inflation added to the sour mood of investors. The U.S. retail sales rose by just 0.1% in October, weighed down by lower spending at gas stations, car dealers and grocery stores. Meanwhile, U.S. producer prices decreased by 0.4% in October. A positive mark was data on the University of Michigan's Consumer Sentiment Index, which rose to 93.1 in November from 90 in October. Cleveland Fed President Loretta Mester said last week that the American economy is ready for a rate hike and that inflation will reach the Fed's target. JCPenney shares dropped by 15% even as the retailer reported a narrower than expected loss. Investors were concerned about weak spending by consumers during the holiday season as other mall-based retailers have cut their outlooks. The company's third quarter loss totaled $137 million, or 45 cents per share, compared with $188 million, or 62 cents per share, reported a year earlier. Revenue for the period grew by 5% to $2.9 billion. Analysts had expected a loss of 55 cents per share on revenue of $2.88 billion. At the same time, shares of Fossil Group, the fashion accessories maker, tumbled by more than 36% after the corporation cut its 2015 forecast as third quarter earnings fell by 45%. According to the company's report, it received profit of $57.5 million, or $1.19 per share, compared with $103.7 million, or $1.96 a share a year earlier. Revenue fell by 14% to $771.3 million. And this concludes the weekly review of financial markets prepared for you by Insta TV. Thank you and see you next week. Bye.